Hello, this is Ahura again with another education video about the candlestick. To use the candlestick analysis and trading strategies, we have to learn the different candles and their meanings. So let's go and see the most important candles and their meanings. Candlestick charts are technical tools that dates back to 18th century Japanese rice traders. Candles including multiple time frame at a single price. Candlestick analysis focus on individual candles, pairs or triples to read the sign of the where market is going. This makes more useful than traditional open high, low close bars or simple lines that the connect dots of closing prices. To use the candlestick analysis and trading strategies, we have to learn the different candles and their meanings. So let's go to the chart and see the most important candles and their meanings in the charts. Let's see first the standard candles. Standard candles are bullish or bearish candles. Bullish candles means that the price starts from down and it ends up or higher. And the bearish candles means when the price starts higher and ending lower. When it starts higher and ending lower, it's a bearish candle, so starting can be the open or it is the open price, close price, and vice versa. When we have the bullish candles, the price which is the lower, it's the open price, and a higher price is close price. These shadows above and under the candles, they can tell us the highest price and the lowest price at that time frame that we are trading or we use this candlestick. This is the basic candles, and after that we have the hanging and hammer, hanging man and hammer candles. A small body here, as you can see, with a long shadow under the candles, at least twice bigger than a body. No shadow above the body, or if there is, it should be too small. Third, the color is not important. Both of them can be red or green. So both of them can be red or can be green, as depend on the market price and the market situation. So no matter the color. Hanging man, we call it the hanging man bearish. Why? Because it usually appears in an uptrend at the end of the uptrend, and it means and it signs that the uptrend is going to be end and it will be the beginning of downtrend, and vice versa. The hammer bullish usually appears at the end of the downtrend, and it signs and it tells us that the downtrend is going to be end and we are going to start the uptrend from there. So it usually appears at the end of the downtrend, and hanging man usually appears at the end of uptrend. Another one is the doji. A doji candlestick pattern is a pattern that considered as a signal of potential upcoming reversal of the current trend at the market. It's usually the kind of the pattern that can be found in both bullish and bearish variants. We have mostly 4 different doji candles. First of all is the doji star. Doji star has not decided to rise or fall. When the price doesn't know to go higher or lower, it's an uncertain market. And usually in the doji price, higher high, and when you can see this line, it means that the opening and closing price is here. And higher point, lower point, if you connect them together, this open and close price, which is at the same level, usually it should be almost at the center of this. So it means something like plus when it's totally cross here, and all this upside and downside is almost at the same level. You can see them at the same size. So when the size is the same and small, we call it the doji star. Doji star means that the market has not decided yet to rise or to fall or what to do. But if you have a same with the longer legs, we call it the long doji. Long leg dojis are the doji exactly same as the doji star, but it means that the market has more volatility. When the market has more volatility, it means that the trader is going to decide what to do. When it's a doji star, it means that market doesn't know what to do exactly right now. There is no decision yet. The traders are still confused and they do not know what to do. But when you see the long dojis, long leg dojis, this long leg dojis means that the market participant, it means that the traders are trying to find a way. So the market has more volatility, the market has more price changing. That's why the higher and the lower price are different. But still, the open and close price at the same, you can see them at the same level. Same as other patterns, these doji patterns also telling you that the current trend is going to be end and changed. The third one is Gravestone Doji. Gravestone Doji can be the signal of the end of the uptrend and beginning of a downtrend, which it means that you can see the Gravestone Doji usually at the end of the uptrend when the price is going up, and you can see the price starting and ending at the same level and at the lowest level, which it means that the price doesn't have more energy to go up, trying to go up, but still it is closing at the same level. Trying to go up, it's still closing at the same level, which it means that the uptrend almost losing its power. And the last doji candle that we are using mostly is the Dragonfly Doji. Dragonfly Doji, as you can see here, usually it's appear at the end of the downtrend and beginning of uptrend. Same as Gravestone Doji, it means that, but just in a vice versa. It means that the downtrend here is trying to go lower, but the power of this trend, the power of the trend is ended, and it cannot go deeper. So you can find it at the end of a downtrend when the price is trying to go lower, but it cannot, and again it's back to the opening price, and it's closed at the opening price. So it means that the current downtrend is going to be end, and we are going to be started, or we are going to start a new uptrend, and the trend is going to be reversed from here. As I told, all these doji candles, no matter Dragonfly, Gravestone, Doji Star, and Long Leg Doji Star, all of them mean that the current trend is going to be end, and we are going to start new trend. Next one is the bullish and bearish engulfing. When we call it engulfing, it means that we have two candles back to back. The first one is smaller than next one. When the smaller one, or the first one, is a red, we call it the bullish engulfing. It means that the current downtrend is usually appear at the end of the downtrend. It means that the current downtrend is going to be end, and it will be the beginning of uptrend. And then you can see the green one or the bullish one first, and then the bigger one, which is the red, or different colors, up to you. The bearish candle is the second candle and bigger than the first bullish candle. It is the bearish engulfing. It means that your current uptrend, usually it appears at the uptrend, at the end of the uptrend. Your current uptrend is going to be end, and your trend is going to be reversed to the downtrend. Next one are tweezers. Tweezers bottom or tweezers top. Tweezers bottom, it means that the candles that usually almost they are at the same size, usually almost at the same size, or when it's the tweezer bottom, it means that their bottom usually at the same level. The price, the opening or the closing price is closing for this one and opening for this one. It means that they are almost at the same level. Usually you can see so frequently in your chart. I mean, they are the kind of the patterns that you can see them too many different times at your time frames. If you change your time frame, you can see them too much. They are together. It means that like the sign that they are giving together is exactly the sign that Dragonfly Doji can tell you. Dragonfly Doji also, it appears at the end of the downtrend. There also appears at the end of the downtrend. Under them usually is the support level, so they are usually appear a little bit above the support level. First you can see the red one and then the green, the bearish candle, and then bullish candle. When you can see that, and when the bottom of here, the bottom of the candles, they should start at the same level. It can be much even better if totally their body in the beginning and at the end, if their body exactly at the same level. But what is important in tweezer bottom? In the tweezer bottom means what is important that they're under their bottom price. The bottom price, their lower price should be at the same level. They can be the part of your current trends or your current strategies, and they can usually tell you that the price and the trends is going to have a pullback. As I told, we have two kind of tweezers, tweezer bottom and tweezer top. Vice versa, or against the opposite side of tweezer bottom is the tweezer top. It means that at the top, at the higher level, or for the bullish is the higher, for the bearish also is the higher price. So no matter if it's the bearish candle or it's the bullish candle, their higher price usually at the same level. When we call it the higher price, it can be the shadow or it can be the body of candles. It's up to you and up to your experience and your chart. You can use both of them, no matter. Usually, but we call that when their body, they have the same level of the body and the same level of all shadows. They are together, it means exactly same signal that the Gravestone Doji tells you. Usually they appear at the end of uptrend and they are telling you that the current uptrend is going to change to the downtrend. It's exactly the same signal that the Gravestone Doji tells you or gives you. So the tweezer top or tweezer bottom, they are usually the candles back to back, almost at the same size. If their bottom price at the same level, it means that they are tweezer bottom, and then their price at the top at almost they're at the same level, it means that it's tweezer top. So tweezer top and tweezer bottom, both of them, they are the signals of changing the current trend to the, if it's the tweezer bottom, to the uptrend, and if it's the tweezer top, it means the changing of uptrend to the downtrend. So this is another kind of the candles. Let's go to see the next. Next one is a morning bullish reversal or evening bearish reversal. So let's morning bullish reversal and evening bearish reversal. Let's see what's the difference. Morning bullish reversal is the patterns consists of 3 candles. First one is the bearish candle. Next one can be the very small bearish candle, or it can be a doji. The third one is the bullish candle that usually should be closed at least above that 50% or middle line of bearish candle. So if this is our candle, bearish candle, the middle line of this bearish candle is here. It should be closed, this uptrend, or the candle that is going higher, bullish candle, should be closed at least above that middle line of your bearish candle. In this kind of the pattern, the third candle tells us the power of next possible trend. When it's the end of, you can see that, or it appear at the end of a downtrend, and you can see this pattern. Then third one is a green candle. As much as this green candle is bigger, for example here is bigger than this one, as much as this candle is bigger than this previous one, this bearish candle, it tells you that the next trend, how powerful it can be. For example, if it's like this, it means that we are in a downtrend. So if this is the small, it means that it's not going to be a trend, it's going to be almost correction, and the next trend doesn't have enough power to go forward. But if it's a bigger, it means that there are too much value or too much energy in the market that can help you to go forward. So it means that the next trend, if for example is here, the next trend, which is the bullish trend, will have more power. And vice versa is the evening bearish reversal. Evening bearish reversal usually appears at the end of uptrend. When it's the end of uptrend, you can see the bullish candle, and then the small candle with the small shadow above or down, or it can be even something like a doji star. And the third candle is the bearish candle, as you can see here, and exactly as it was in the morning bullish, in the evening bearish also. As much as this third candle is longer, it means that your next trend has more potential or less potential. As much as it's bigger, it means that your next candle has more potential to go forward. And this is usually this kind of the patterns that evening bearish reversal or morning bullish reversal, you can see them so frequently at your chart, and you're used too much at the candlestick analysis. This is the total understanding of candles. This is the general overview outlook, or whatever we can say that. This is the general view of different candles. Candlestick patterns and candlestick analysis is a very big topic. We can talk about that hours and hours. But at the beginning of candlestick analysis and candlestick charts, we needed to know these candles, their meaning, what they mean, and how they appear, and how we should read them. This is the basic, and in the next videos we're going to talk more about the candlestick, about the different patterns, and about the different strategies at the candlestick pattern. And for sure, it will be so much more useful for you guys. Hope it was interesting, and hope it was useful for you, and see you soon in the next videos.